Hello, welcome to the Desert Blockchain Open House, Desert Blockchain Camp Open House at 27th Avenue and Georgia in Phoenix, Arizona. My name is Jay Carpenter, and I am the founder of Desert Blockchain. Let me stop screen sharing. And today we are going to be talking about front running and basically some game theory and that sort of thing that's present in the current cryptocurrency space, blockchain space, how this might impact, your transactions, your interactions with decentralized constructs, and so forth. Why is this important? Why should you be interested in this? And we're going to be talking about that during the first hour. If you're not familiar with our format, during these sessions from the first hour from 11 a.m. till noon, we have a workshop on various topics of decentralization, cryptocurrency, so forth, and Web 3.0. And then from noon until 1 p.m. Arizona time, we will be basically just showing a placeholder screen. And here locally at camp, we have a pizza lunch and we do networking, that sort of thing. And then we'll open the Zoom back up at 1 p.m. And you know what? We might try something different. We might just keep the Zoom going today, just so people see what's going on, and turn off the sound so that we can have conversations. We might experiment with that today, and we might not. So then at 1 o'clock, we'll open the Zoom back up, and anybody that's joining us remotely, either via the live stream, the YouTube live stream, where you can put questions and comments in the chat over to the right, or you can join us via Zoom if you happen to be a Desert Blockchain citizen, and have a live interaction. We have Martin joining us from New York. And Martin, we appreciate your participation. Thank you. So if you're interested in becoming a Desert Blockchain citizen, you can do that on Patreon. There are links below the YouTube live stream and in the meetup and so forth. It's $10 per month. We're completely community supported, and that helps pay for our camp here. It helps pay for the pizza lunches. It helps pay for all sorts of things that are part of staging this community and so forth. So we appreciate you if you are a Desert Blockchain citizen for $10 a month. We also plan to roll out some prototyping for the Desert Blockchain citizens, and the sooner you become a Desert Blockchain citizen, the higher the priority you will have for certain benefits and certain choices that I think you'll be very interested in getting. So that's how we work, and we appreciate your time and your attention. We intend to make this valuable for you, and we know your time and attention is valuable. And today we're going to have Shane Sandler of Blockchaingerous and also Crypto Cannoneer talking a little bit about his project, Crypto Cannoneer. And we will basically, he will be talking about the front running. So if you have questions, join us via Zoom if you're a citizen, and you can put your questions in the YouTube live stream chat. So I'll turn it over to Shane. Take it away, Shane, and we will break for lunch at noon and then back at 1 for general questions and so forth. Go ahead, Shane.
All right. Thanks, Jay. All right. Welcome back to our weekly live stream. I'm excited for today's topic. Like Jay said, I am Shane. I go by Blockchaingerous on the internet, and I run a carnival and series of live stream games here called Crypto Cannoneer. So if you're not familiar with my project, you can see it going on in my live stream behind me. This live stream runs 24/7. And this is basically a real shooting gallery that we have set up in the warehouse here. So You can press right and left. Oh, it looks like one of my cameras froze. Let me wake it back up real quick. I've been having that problem a little bit more often lately. Maybe I just need to reboot the whole computer. It doesn't get rebooted all that often. Probably need to just program in some automatic reboots and stuff. Let's see if it wants to wake back up. But basically, anyone can take control of these cannons and shoot them. We've got water gun. Let me fire that off real quick since the main stream here seems to be struggling. We'll go ahead and spray. So that's the water gun you see down there in the bottom left. And you can aim it around. You can try to get it into the buckets or shoot at the dolphin there. I'm wondering if this webcam here got bumped or unplugged. I'll have to check that out in a little bit later, but we don't need it for what we're going to be talking about today. But go ahead and check out Crypto Cannoneer sometime, and we will be adding more improvements to that as we continue on here. So let me switch my camera view here. All right, so front running is an interesting concept. I'm pretty into it. It's definitely a financial, it's definitely more focused on trading and markets and exchanges than any sort of programming. A lot of times on these weekends, we talk about coding and programming and how to actually build stuff with blockchain and cryptocurrency. And we might get into that a little bit more later today, but the last 2 weeks, we've been a little bit more focused on the finances and trading. We know those are popular topics. And so we like to talk about them too. Plus, they are of particular interest to me because I am pretty involved in algorithmic trading and like bot trading, which is a fun blend between coding and programming and, you know, the price action and trading side of things. So a lot of times those two areas are really separated, and that the people who want to talk about programming and coding don't want to talk about trading and price at all. But this is an interesting place where those two things kind of blend. If you didn't catch our session last week on liquidity pools and automated market makers, I suggest you check it out. And it's definitely related. This is sort of a supplementary session to that, or maybe even this one would have been better before. It's kind of a prerequisite. Understanding front running definitely helps you to understand some of these bot trading and some of these algorithmic tradings and how people do things. So let's dive right into front running. So let me pull up what I was looking at here. Okay, so like the technical definition of front running is it's a practice where basically someone, usually a market maker or like a large entity that has both control over the market and private information that the rest of the market doesn't have, they're using that information to make trades. So it's sort of like insider trading in a way, but it's usually like much shorter term and much more based on like market movements than maybe political knowledge or whatever other insider trading knowledge someone might be using. So front running is most commonly done by exchanges. And so essentially the exchange that you're trading on is playing against you. It's like betting against the house in the casino. You know, they have all of the information and they aren't sharing all of that information with you. So this is like a pretty serious and difficult situation for people who are trying to trade on platforms that don't let you see the order books on their various trading pairs. So if you don't have access to the actual order book and, you know, the orders that are available there, you don't have the information about where, you know, maybe a large limit sell or a large limit buy might be, especially if like this exchange is either like a free trading exchange, like they don't offer they have no fees, or they have like secret order books as well. So let's dive into that first scenario. So no fee exchanges. So places like Robinhood and a lot of these, so that's really more for like traditional stocks, but it also applies to a lot of cryptocurrency exchanges. And then a lot of these more traditional stock market type places are starting to offer crypto as well. And so they, the way that they can offer feeless trading, it says in quotes here, definitely, is that they take their fees based on the spread. So the spread in an asset trading pair basically is describing the difference between the buys and the asks. So if someone wants to buy an asset for $1, but no one's selling for less than $1.10, that spread is 10 cents, 10%. And, so there's a lot of wiggle room there for them to potentially make profit if they're connecting potential trades somewhere in between there. And so that's how they can essentially take a profit off of the spread, is when they create their matching order book or their matching engine. The matching engine is actually giving them a cut of the difference between the buys and sells. So that's how front running kind of works on like the technical level, is that the exchange or the order book or the market maker is basically, that's why it's called front running. They're sort of positioning themselves in between the two parties that are trying to trade. And so it's not necessarily like a true peer-to-peer trade when you're using like a centralized exchange. The centralized exchange is using its own matching engine to basically match up trades and pairs, and they're taking a cut out the middle if they are like a feeless type of exchange. And so you can typically look up what their spread fee is, even on places like Robinhood that claim to be feeless. You can see like every different pair has a different spread fee. So something like XLM or Lumens has like a 2% fee built into the spread calculation, versus some more liquid assets might have a much smaller spread fee, like a 0.5% or something like that. So those fees are listed and you can look them up, but they aren't really like super public facing and front. You have to actually dive in to try to figure it out and how they're actually taking their profits from you. So that's an important part of front running that is really relevant to like what the true cost of trading on some exchange might be. And so that front running premise is the underlying premise of how liquidity pools work. And so if you're not familiar with liquidity pools, I definitely recommend checking out last week's stream where we really dove into automated market makers and liquidity pools. So basically what the crypto and DeFi space has been doing for the last few years is taking a centralized exchange like Binance or Robinhood or whatever, and replacing it with DeFi protocols. So instead of the matching engine and the liquidity pool being a centralized entity, it's just code. It's like a smart contract, it's a liquidity pool. And so different liquidity pools have their own spread fee basically built into them, just because they're front running themselves as well. And so like the Stellar native liquidity pools that just came out, they front run with like a 0.3% spread fee, versus like some of the other liquidity pools like Pancake Swap and Sushi Swap and whatever else. They usually offer more of a variable rate spread fee and liquidity pool. And so this is one of those areas where the two different parties are like diametrically opposed. So like the same way that like miners on like Ethereum, they want the highest possible transaction fees, so they're making as much money as possible, versus people who are actually using the network want the lowest possible fees. So they have totally opposite desires. And that's kind of where these types of things butt heads, these liquidity pools and these front running automated market makers, because the people who deposit their funds into a liquidity pool and an automated market maker, they want maximum profits. They want to gouge the spread as hard as possible so that they can take in as much off the top, in between the buy and sell prices as possible, versus the people who are actually like actively trading, especially high frequency traders or people who are trading large quantities. They want the smallest spread possible and the lowest front running fee possible. So I think that you get into some really interesting dynamics and like differences in incentives once you start talking about what like is the appropriate spread or like front running fee to charge once we're talking about liquidity pools and AMMs. So like this new Stellar liquidity pool is getting criticism for having too low of fees. Like, why would you deposit your funds into a liquidity pool that's only taking 0.3% when there's liquidity pools out there that'll take the maximum available, which could be 5% or 10%, or, during times of extreme volatility could be 100%. Some of these small cap crypto coins, once you deposit a small amount of liquidity into the liquidity pool, and, they could go wild, especially some of these sort of Ponzi scam tokens that come out. that they just have a price that rockets up. They experience extreme volatility and a massive difference in spread. And so when the liquidity pool is allowed to take as much profit as possible off of that spread, it's really hurting the users of that coin, of that liquidity pool, of that exchange, for the benefit of the people who've deposited liquidity into that pool. So it's very an interesting dynamic between people who want completely opposite things. They're essentially playing against each other, which kind of leads into some of the stuff on game theory that we're going to talk about. I don't know if we're going to do that next week or just in a future session, but we definitely want to talk about more about game theory, and maybe we'll dive into it a little bit today. Game theory and how players who are basically playing for themselves and looking out for their own best interests kind of take the actions that they do in order to steer things in the direction that suits them the best. So a little bit more on front running. So the actual process of it, it's typically prohibited in more traditional financial markets. And I don't exactly know the details of how some of these places like Robinhood and stuff get around that. But in the crypto space, obviously it's not prohibited because crypto still has wild, wild west regulations going on. So quite a few centralized exchanges engage in the practice of front running. And like I said, specifically the ones that are offering feeless trading. So they might be filling up a buy order or driving up the price, or they might be intentionally putting in like a sell wall to try to drive down the price. And so it helps when you can see the order books, and that can kind of give some of the smaller users a little bit more information. But even on exchanges that offer like an open order book and you can see where the buys and sells are, quite a few of them offer like a secret buy sell for a higher fee. So like if I was a big whale and I wanted to put in a big sell order, but I didn't want to just be sitting there on the order book so everyone could see it and then try to avoid it, you could potentially pay a higher fee in order to have it be a secret order on the order book. And then it wouldn't show up in the order book. And that's a pretty common practice on a lot of these exchanges that do show you the order book. And it's not a secret order book, but there's like a premium order book there. So that's an important thing to know. And it's just something to be aware of in the trading space when you're, especially if you're trying to create like algorithmic trade bots or come up with a profitable trading strategy and you're trying to calculate in like your fees. You know, if you know that you're getting charged a 0.5% fee on both the buy and the sell, you know, every trade that you make, you want obviously to be in profit. So you have to have over a 1% profit margin because otherwise it's all just being eaten up in fees. And so sometimes people miscalculate their fee base when they don't realize that there's a spread fee going on, essentially a front running fee in there because they think they're getting the best price. So it can just kind of complicate the math on how you're trying to figure out a profitable trading strategy, particularly for high frequency, like algorithmic trade bots. That's where it really has a big effect. And I guess I do need to give the sort of blanket waiver here. I'm not a financial advisor. I'm not your financial advisor. So please make sure to be careful in the crypto markets and, you know, don't invest more than you're willing to lose. You know, it's a risky space. And so you want to be careful with it and make sure that you really know what you're doing. And especially once you start getting into some of these exchanges that offer leverage, the leverage is almost by definition a front running product. So the leverage that you're getting is from that centralized exchange and it's based on their centralized order book. So a lot of people on some of these less reputable centralized exchanges and smaller exchanges will put in like a really intense, highly leveraged order and then see the trading pair that they put it in on just like flash crash down to their stop, or like what it's often referred to is liquidation price. So once your reserve assets no longer can cover your potential losses on a leveraged trade, you get liquidated. And basically they sell your asset at whatever loss is required in order to cover basically what you owe on that leveraged position. And so a lot of people claim and have seen like their own exchange flash down to a ridiculous price for that pair that wasn't showing up on any other exchange and is not representative of the global market and the global value, but it was extremely specific just to that order pair on that exchange, and seeing themselves get liquidated, which is unfortunately a common practice in some of these centralized exchanges. You can see them essentially because they have, that's what front running is all about, is having information that the general public doesn't. They have the information on where people's stop losses are and the information on where people's liquidation prices are. So they can sort of wash trade or push the market in their favor in order to liquidate those people and just take their assets. So you have to be really careful on some of these exchanges that don't really have any laws that they have to follow. You know, it's another part of sort of game theory where if there's nothing stopping them from doing so, they're just going to act in their own best interests, even if it might not be in the best interests of long-term customer satisfaction or retaining customers. You know, they're just going to take your money and move on to the next person. So be super careful on anyone who's trying to get into leverage trading and margin trading and short selling and that kind of stuff, because you, in order to do any of those types of leverage trades, you pretty much have to be on a centralized exchange that is front running you. And so you're playing against the house, and that doesn't usually turn out so good.
Yeah. So, Shane, I don't know if you covered this yet or not, but the mechanisms for exchanging this information are usually like a back channel outside of the blockchain and the regular network. So that's my understanding of it, is basically certain miners, certain, you know, market makers and so forth have like a back channel, a separate channel where they're communicating and they're sending information that creates this front running. So, is that your understanding as well?
Well, I know that exists as well. That's even more of a complicated sort of team effort as far as, you know, coordinated pump and dumps and front running between multiple parties. I pretty much at this point only talked about centralized exchanges front running against their own customers. And that's pretty much the most basic, simple form of this type of front running, and market makers actively playing against the smaller fish and their own customers, versus what Jay's talking about is sort of the next step up, which would be like a team coordinated effort, maybe multiple market makers working together or telling them like, hey, you know, I've got a huge sell order here and it's going to force the price down. So you need to put your buy down here so that they can sort of be, that's just pushing like full market manipulation, even beyond just what could be considered ethical front running. I mean, I guess ethical front running could be considered sort of like what Robinhood does, which would be they tell you about it, you know, it's public information. They say, hey, we are front running you. But
well, with Robinhood and the regulated exchanges and so forth, that's called order flow. And you already touched upon this, which is basically they say you trade without commission, but actually you are paying the commission, but it's built into the spread of the transactions. And that's kind of a common practice. I'm not aware of that being against regulations at this point. The second part that you're talking about in terms of like centralized exchanges doing preferred pricing, that's yet another level that you know, is maybe akin to order flow, but you know, can result in dramatic price differentials, which is what you're talking about.
yeah.
But there's yet another one, which is, my understanding, is happening on the Ethereum ecosystem, which is basically that there are off-chain communication channels happening that are starting to stack the information and the blocks that are the information in the blocks that are processed, and that can be advantageous as well. And that's completely off-chain, and this sort of back channel, side channel communication. And I'm not sure, maybe you know, if that could actually impact the information beyond the price that's happening associated with like the Ethereum blockchain and the computation and so forth. So
Yeah,
are you?
I'm not as familiar with that side of things, but I fully believe it. I think that anywhere where there's money to be made, and we're really starting to push on the edge of a discussion on game theory here, is that people are going to figure out how to game the system and how to work things in their own favor. And so whether that's miners who have special information to which blocks are going to be mined and which transactions are going to be processed, because any of these on-chain decentralized exchanges like Uniswap, they, the transactions can only be validated in the blocks, and the blocks take a little while, and there's only a certain amount of blocks that transactions that can fit into any individual block. And so, yeah, it would be relatively simple to, crank up transaction fees on preferential, price trades, or just, it's all just smart contract executions. If this buyer is willing to pay a higher price on the actual asset, as far as, them submitting a trade on, Uniswap or some other decentralized exchange smart contract, the miners can choose which transactions to actually process first. And so, yeah, like you're talking about, this is like order process flow, which it sounds like the differences between front running and order flow are very minor, like minor with an O, not minor with an E.
Yeah.
Where, there's a very fine line there, kind of the same way there's a fine line between an MLM and a Ponzi scheme. It sounds like that there are definitely ways there that the miners can game things more in their favor, because they have a ton of power. Not only do they have more assets and, probably a lot of liquidity in the pool, but the actual miners control which transactions get processed even on these decentralized exchanges. So you could push a transaction to have higher mining fees so that it gets prioritized into the next block, and then can negate some other price movement that you didn't want to have happen. And I don't even know the specifics on how the miners operate, if they can choose to process transactions that don't even have the highest miners fee available to them. That's not, I'm not a miner, and that's not something that I really dove particularly deep in, but they could either increase the gas fees on their own transactions that they want to push through faster, or I don't know if they're able to prioritize transactions that don't have the highest miner fee. I imagine there's software that can do that. I don't see why there wouldn't be.
Yeah. Well, suffice it to say that if you're used to trading in, let's say, the regulated securities markets, you assume that people are playing by the rules for the most part, and that there are penalties if they're caught for what's called insider trading, which is basically company executives passing along information before it's publicly known, and then profiting from that information. And I think what you have to keep in mind in this decentralized world is those rules don't apply here. And it's basically all is fair. All is fair in love, war, and decentralization. So, you got to keep that in mind. And if you study economics, you'll find that some, notable economists think that insider trading should be allowed, that's part of the efficiency of the market in terms of the exchange of information, and that, when it's insider trading for conventional stocks, you're likely to be trading on information that's just as likely to be wrong as it is right, and things can happen in certain transactions and so forth. So I think it's, we're used to thinking that insider information and insider trading is a bad thing, but when you look at the economic literature, it's not necessarily a bad thing. And some people propose that there should be no insider trading rules and penalties for conventional companies and stocks and so forth. I happen to be very much in the free market, free information camp. And I think that, it's almost impossible, if not impossible, to stop insider trading, insider information, and so forth. And B, from an efficient market theory, it's questionable if it actually helps to try to create this game where everybody's got to wait and basically go against their natural economic incentives to maximize their own profits and so forth. So that's just kind of my 2 cents on this, but that's it's an interesting dynamic. And if you're involved in this realm, whether it's NFTs or whether it's cryptocurrency or even the information that's posted on blockchains, I think you always have to be aware of what's the incentive set around the players, because you can be sure, you can trust that if there's an incentive for somebody to game the system, they're going to be trying.
Yeah, absolutely. I think that this is definitely leading into a discussion on game theory, and how the general understanding being that all players in a game are looking out for their own best interests. They're going to do whatever it is that results in maximum profits for them at the cost of everyone else. And a lot of these cryptocurrency games and, even the regulated markets and asset trading, they're a zero-sum game. Someone has to lose in order for someone else to win. There isn't more value being created necessarily. And so a lot of these trades have people taking from those with less information, or with different timing or different amounts of assets and leverage, the less ability to move the market. And I think that definitely plays into NFTs. Like Jay mentioned, there's a lot of interesting financial stuff and manipulation going on in NFT markets, whether it's by the actual creator of the NFT that is trying to drive up the price artificially, or wash trade it to show for volume and activity, or just completely doing their own front running and trying to create multiple assets that they can manipulate the price of and try to control the spread, and just trying to take profits just off the difference between buyers and sellers. So all these unregulated markets have those types of intricacies to them.
Yeah, all this highlights a fundamental difference between centralized institutions and decentralized institutions or decentralized constructs. Coming from the world of centralized institutions and constructs, we assume that, I'll let this compressor,
just turning that off real quick.
So in the centralized world that we're used to, we assume that whoever's running the centralized bank or exchange, the stock exchange or whatever, they're looking out for our best interest. We give them a certain degree of trust that they're playing a fair game, that we can trust them and so forth, which is fine. But in the decentralized world, we start with a foundation and a premise that we can trust no one. And from that distrust, this phenomenon of trust and transparency is created, which is 180 degrees opposite from a centralized construct. And I think that's definitely present here in the front running, but it's a key difference. And personally, I trust starting with a premise of distrust, and from that distrust, creating something that I can trust via the mathematics or the transparency of the decentralized realm that I'm dealing in, versus the other way where I start with a premise of trust, and then I'm disappointed later on when I find out that trust is broken and my best interests have been compromised, basically. Does that make sense?
Absolutely. I think that has a lot of interesting elements to it, and as it kind of folds into the decentralized like DeFi space, because DeFi protocols and DAOs, decentralized autonomous organizations, have gotten the complexity to the point where they can mimic a lot of these. I don't know if nefarious is the right word, but maybe unfair or sort of shady, I guess. But so just some of these practices that are not totally upfront. They are using information that not everyone has. And so some of these DeFi protocols have started to utilize some of these tricks that some of the more centralized entities maybe were known for. And so I think that when we're making a distinction between like centralized energies and or centralized exchanges and decentralized exchanges, as far as like front running is concerned, there's other elements involved. Like I said, some of these automated market makers and liquidity pools are actively front running as well, some of them to extreme degrees. And so when a DeFi protocol or decentralized exchange isn't immutable, like it's able to be changed, usually those changes are based on community votes. And those community members often have different interests, whether they are active traders or if they're liquidity pool investors or whatever their own personal incentives may be. And I think that those types of things start to really blur the lines between some of these decentralized protocols and like to be more similar to centralized entities. They can actively change the rules and change the game to be more profitable for one party or the other. So I think that it's really important to know the rules that have been established by whatever decentralized exchange you may or may not be trading on, and how those incentives are aligned and how changes can be made, and being on top of the changes as they are made. And then it's tough to be that involved in that many spaces. So like every blockchain pretty much has its own decentralized exchange. Most of them have multiple, because most blockchains don't change. People create decentralized exchanges on top of a blockchain. Uniswap is built on top of Ethereum. And while there might not be any one person who controls it, because it's set up more like a DAO, like as a decentralized autonomous organization where coin holders and stakeholders can vote on protocol changes and things like that, some of them are not that apparent or not that decentralized at all. Like, so a lot of these regulators are going after some of these decentralized entities and DAOs that are decentralized in name only. And they claim to be decentralized, but really there's one dev or a few people who have control over the whole protocol, or such a majority stake of the voting tokens, or the stakeholder shares, that they can totally control it and change things up at the flip of a switch. And so those are really important sort of technical back-end elements to get involved with, that it's pretty hard for a lot of people to be that involved and that on top of all the changes and everything.
Shane, we've got a question in the chat on the YouTube live stream, which is this is from Ethan. He says, apologies, I came in a little late. Did you cover how the practice of front running differs on decentralized exchanges? And then he said, correct, I watched part of the video now where you covered that topic. So is there anything else you'd like to say about how the front running differs on different exchanges?
Yeah, absolutely.
To...
So we did touch it briefly, but I'm happy to recap and talk about it a little bit more. I think that pretty much every decentralized exchange has its own way of managing their front running and their spread management, and their order, their trade execution order. So like we said, that some of these decentralized exchanges, pretty much any decentralized exchange now has liquidity pools involved as well. I mean, there's still a few that don't, but that's where they're all pretty much heading, is because that's how they get the liquidity that they need. And all of these automated market makers and liquidity pools have to be front running. That's the only way they make a profit. They are by definition front running. And so if your decentralized exchange doesn't have liquidity pools, they might not be front running, and they might just be taking like a percentage fee, or they might not be doing any. They could be truly feeless. Those types of models do exist, but most of the ones that involve liquidity pools and basically sharing the profits from that front running with anyone who's deposited liquidity are definitely the most popular. So on these decentralized exchanges like Uniswap and PancakeSwap and SushiSwap, and even the Stellar decentralized exchange with its new liquidity pools, they are front running and they are taking a profit spread, but they're distributing those profits back to the people who actually deposited the liquidity. And so like we were talking about earlier, some of them have like a set spread fee. Like Robinhood has set spread fees for its different pairs. The Stellar decentralized exchanges liquidity pool has a set 0.3% spread fee for distributing to the liquidity pools. But a lot of these other assets and decentralized exchanges with liquidity pools either have a variable spread fee, or they can set the spread fee differently for different pairs. So I think like if you create your own token on Binance Chain and you deposit some liquidity on PancakeSwap, I think you can choose what you want the spread fee to be. And then I think some of them too, they allow you to take advantage of extreme volatility and really take a lot of spread profits during huge times of crazy price action. So those decentralized exchanges kind of all have their own operating instructions, and they can be changed at any time because most of them operate on a DAO, and whoever holds the LP tokens is typically what they're called, the liquidity pool tokens, gets to choose, and they get to vote. And if one entity has the majority stake, they can change the rules at any time. So that is something you really got to be wary of in these liquidity pools.
So Shane, is there any way to like do an audit to keep the exchanges, honest when they say we've got a certain fixed spread? Can you, track that on the blockchain in question?
I think that would be really tough, particularly with these centralized exchanges where the orders aren't actually happening on chain, especially between like cross chain stuff. Like if you're trading Bitcoin for lumens on Binance, you will never see any of those transactions on chain. It's just being traded internally by Binance's matching engine, and there's no actual transactions on the Bitcoin ledger or the Stellar ledger. So that would be super hard to track unless you could get their financial documents, which I imagine they guard very closely. And since, a lot of these centralized exchanges are either stateless or being run in, Cayman Islands or Estonia, or these countries that are not particularly involved in, international and, anti-money laundering stuff, they don't really play nice with regulators. They keep all of that stuff really close to their chest. And so there isn't really any way to audit them. I think with some of these regulated exchanges, like Robinhood, they have regulators that they are subject to who I assume have access to their financials, and they can go through and audit them. I can't imagine what a nightmare of a process that would be for some sort of auditing firm or accounting firm. It definitely have to be done with software, but there's definitely like blockchain analysis tools out there that could help with the auditing of any of this stuff that is on chain, like some of these decentralized exchanges that are entirely on chain, like, Uniswap is all on chain and it only allows you to deal in Ethereum assets. So it would probably be relatively simple to write some software that could audit like those types of on-chain swaps and analyze what the actual spreads have been and how that's been going on. But any of these centralized exchanges where they're doing cross-chain swaps, or they're doing, off the book internal swaps, and, you don't have access to any of their financials, it's just going to be impossible.
Why don't we wrap it up at this point, and I'm sure we'll be talking about this topic later on in future upcoming sessions. I think you have to keep in mind, whatever you're doing in the decentralized realm, that you've got to look out for your own best interests. And basically, that's part of the beauty of decentralization is you have the tools to keep track and audit for your own best interests. So there isn't a centralized custodian or anything else like that. So, all right. So unless we got a little feedback in the chat on the live stream. So we're gonna I thought about keeping the live stream on instead of the placeholder, but I think we're gonna keep it the way we've been running it because there's more freedom just to talk and chat here locally. But you can join us again in about an hour, a little over an hour from now. And we'll open up the Zoom and the live stream again for any kind of community chat, any topics that you might want to discuss. But for now, we're going to break for lunch, our pizza networking lunch with the folks that are here at Desert Blockchain Camp. And we appreciate your time and attention. We will be having a session next week on, I believe it's the 4th of December. And at that time, I believe, Shane, you're going to be showing us you're going to be actually setting up an in-house control pad for the Crypto Cannoneer game, correct? And doing that using Node-RED. So that's where we're at today. Thanks for your attention. Hopefully we answered your questions, and we're going to break for lunch now and then resume in a little over an hour. So thank you very much. It's time for lunch.
Can I have this now?
theoretically even be able to cash out. So there's a lot more going on there. People who come in just wanting to buy a cheap coin, they don't necessarily understand. So I'm trying to come up with a fun way to sort of gamify some of these economic concepts to help newcomers from getting pretty much scammed with those kind of really rudimentary oversimplifications of tokenomics and market cap and things like that. So it's not an app yet. Currently, it's run by two separate things. So it's controlled by a Telegram Messenger, which is just a free messenger app, and then the live stream is on Twitch. So we're working on integrating the control and the stream together into one. But yeah, you can join the Telegram group at t.me/cannoneers. Just gotta get the Telegram app. Starting next week, I'll have it set up. Download it on the phone. So you can do that too.
Hey, Martin, I was talking to you and I discovered that I had muted myself, so you didn't hear. But we were wondering if you have ever played the Crypto Cannoneer game from your place from New York. And you might be on mute, or you might.
Yeah. Hey, what's up, Jay? Yeah, I was on mute.
Okay.
Yeah, no, I tried to actually log on and play that game like last week afterwards, but I think there might have been like something going on with the arm, whatever, like on the not on the water cannon, but on the tennis ball shooter.
Well, that's quite possible.
Yeah, but it respawns and everything. Yeah, no, it's super. Honestly, I was trying to figure out exactly how that was programmed. It's pretty neat. I haven't really messed around with Telegram in that capacity before, so it was pretty neat to see an implementation like that.
Yeah, it's actually all programmed on Node-RED, and it's open source. If you want to hop in, if you ever want to look at the GitHub, it's the Node-RED flow is actually available. So it's a fun way to kind of get into some of the programmatic or the visual programming of Node-RED, and the integration to Stellar is available as well if you want to play around with Node-RED and an actual testnet blockchain.
Yeah, definitely. Yeah, I really want to start definitely looking at that a bit more. I mean, just even like the whole Node-RED and like Stellar, it's actually really similar to a program I used years and years and years ago. That was way ahead of its time. So I'm like, I like the way it looks, the flow, everything. It's great.
Yeah. And correct me if I'm wrong, Shane, but generally the water cannon is running, isn't it? The water gun
runs 24/7 now. So the two issues I've been having with the tennis ball gun is sometimes the reloader jams, which I've gotten most of the kinks out on that. The problem I think that you were talking about was that we had a power surge in here, or it rebooted, and the default on the gun was to protect me, and it was admin locked. And so after a reboot,
got it.
it doesn't fire. So I'm going to change, now that I'm not standing in front of it all the time, I'm going to change the default on that. I can do it right now. To default to be admin armed, and so then when I'm thinking on it or whatever, I can just turn that off.
Big announcement, Martin.
All right.
Shane told me that he just brought into camp a dunk tank. So
nice.
We need to set the founder up of Crypto Cannoneer on the dunk tank to go for the first round, and see, Martin, if you can be the lucky controller of the gun that puts Shane in the dunk tank.
Nice. Awesome. Well, we're gonna do that today or next week?
No, we're not going to do it today. He doesn't have it set up yet, but we're coming up with new schemes for sure.
Awesome. Fantastic. Looking forward to it.
Yeah. So, all right. There's one person watching on the live stream. Any questions? You can type your questions in the in the chat there. And anything you'd like to cover, Martin? Anything you're watching?
Well, the front running thing is super interesting. I mean, I was always very into the whole front running thing when it was coming out, as far as like traditional equities and securities go. Like, I'm not sure if any of you guys got a chance to like read Flash Boys from it's the same guy, the Big Short guy. What's his name? I can't remember his name, but he's fantastic. But yeah, he wrote about it in Flash Boys. There's also IEX. They're an exchange, a traditional securities exchange, but they actually got out high-speed trading from their exchange and their liquidity pools they implemented a speed bump. So it was like something like 30 odd miles of optical wire just looped around basically inside of what looked like a shoebox. And that is how they slowed down, because basically front running only works when you allow it to like a network to run as fast as possible, or at least faster than the majority of the other participants. So they were able to slow down all the incoming orders from outside exchanges to their exchange, basically, and match the speed that they operate at. So it eliminated front running on their exchange, and you could get basically like the best price on their exchange.
That's pretty cool. That's interesting.
Yeah, that was made by this guy Brad something rather. He was just a normal banker at a Royal Bank of RBS, Royal Bank of Scotland, which is actually in Canada. But yeah, that's what he's known for.
Cool. All right. Well, unless there's other topics or whatever, I think we're going to shut down the Zoom and the live stream and call it a day. So thanks, Martin, for joining us. That's interesting stuff you're adding to the conversation. And we'll be back next week on Saturday. And we're going to be building a controller for the Crypto Cannoneer target range so that you can operate it here in the Desert Blockchain Camp.
Nice.
So anyway, all right, cool. Thanks for joining, and we're gonna shut down the YouTube and the Zoom now.
All right,
All
excellent.
righty.
All right, thanks for having me, guys. Great chat as
Talk to you
usual.
later.
And